Hi, good morning, good afternoon, everyone. Thanks for joining my YouTube channel. Today, we have prepared a series of about 18 episodes, 7 to 10 minutes each, for the SEMA Strategic Case Study Examination applicable for May and August 26 exams. And if you're preparing for the SEMA SCS May or August examination, this case will determine your result. So, this is not just the theory, this is real strategic problem. And in this series, we are going to break this case down, not like students, but like the board and the senior finance manager. All right, let's begin. In this session, we are not just reviewing the company overview, we are learning how to read this case the way a senior finance manager would. This is important because in the exam, your marks are driven by the interpretation and not by the information. Now, let's be clear about what we're trying to achieve here. By the end of the session, you should be able to do four things. First, interpret the case, not just read it. Second, understand what the numbers actually mean. Third, identify the real problem. And finally, think like the examiner. Because in the examination, the first impression is the last impression. So let's start with what most candidates usually do. They look at those numbers, like revenue is 2.3 billion, gross margin 64%, operating margin 50%, and their immediate conclusion is, oh, this is a strong company. And on the surface, that is correct. But that is exactly where the weak answers stop and the strong answers begin. So, what do these margins actually tell us? A 64% gross margin indicates strong pricing power. It tells us the company can charge significantly more than it costs to produce, and that only happens when customers perceive value. Now, operating margin at 50%. This tells us something even more powerful, that is highly profitable business with efficient operations. But this is the only surface view. So, what is a trigger point? What is a turning point? Now, look at that carefully. Revenue has fallen by 18.8%, and at the same time, the competitor has grown by 9.9%, and this changes everything. Let's interpret this more properly. This is not a market issue, understand. This is not an economic slowdown. This is customers switching. And when one company declines, the other grows, it means market share is being lost or shifted, right? And the Kwirtmak is losing competitive advantage here, definitely. And this is really serious. Why? Because we have high margins but falling revenue. And this combination is unstable. Margins reflect past success, revenue reflects current performance, and this is the early stage decline. So remember, this is a sign of early stage decline. What strategic position we have? What Mac operates a premium differentiation model. We all know, right? They do not compete on price, they compete on value. But this model has one major risk. If customers no longer believe that the value justifies the price, what will happen? The premium will collapse. And that gives a birth to the risk profile. Now let's bring in the financial angle, the perspective. Beta, which is 2.3. That's really high. It means the business is highly sensitive or volatile to the market and the competitive changes. Cost of equity 16.8%. And this tells us investors see the company as risky. High risk, requires higher returns, right? Now, if we look at the operating structure footprint point of view, global operations, right? Multiple factories, what it tells, it gives you scale, but also the complexity. And the implications can be supply chain exposure, currency risk, or the coordination challenges. Now the company has identified several risks, which is economic, demand volatility, product quality, supply chain, compliance. But ask yourself what is missing. The biggest issue in the case is not listed, which is competitive risk, which is missing. This is a governance weakness. If you don't identify that risk, you cannot manage it. Now let's step back. What is the real situation? What Mac is profitable, right? Capable, well positioned, but is losing customers still. In one line, what Mac is high margin premium business experiencing a loss of competitive advantage in a high risk market. In the exam, your language matters. Use phrases like loss of market share, erosion of differentiation, pricing pressure, thinking model. Now this is your framework. Customer, strategy, financial risk, decisions. This is how top answers are built. In the next session, we answer the most important question: why do customers choose what Mac and why might they leave? Till then, please take your case study serious, be strategic, and stay calm. Thank you. See you again in next few couple of hours.